we are such a developed nation that we have a lot of habits around things that work well enough.
At what point does it mean that the US has just missed the boat and is so far behind in this story? The US could no longer claim to be the most advanced banking system in the world.
Welcome to the first Breaking Banks of 2026. And, as we enter, an interesting era, a lot is changing, and yet everything is the same. When I first met Brett, and I still remember ordering my copy of Banking 2.0, I was co-founding Perk Street. We were an online-only institution at a time where that was exceedingly novel. Forget about a mobile first, like what Brett was building with Movin', but at the time, it was almost sacrilege to be talking about this idea of digital only. And we entered an era, and I think Brett, Breaking Banks was an era of digitization was almost heretical in discussion, as you were really pioneering a big piece of this in Asia. And I'd love to kick off, if you go in your Wayback Machine, to the beginning of this, and when we're kicking off the digital transformation, first the slog and then the glory days to set us up to where we think we are now, which JP, I'd love to hear your opinion on. But Brett, take us in the Wayback Machine of the digital transformation revolution.
Well, I mean, I had that epiphany, back during the dot-com days that, because in 2005, I was commissioned by HSBC to do this report on what HSBC would look like in 2020. And that report, which was called HSBC 2.0, became essentially the first piece of collateral that ended up in the book in Bank 2.0. But that was 2005, so way earlier before we met, Jason. But Paul Thurston, who was the head of the CEO, or not CEO, head of retail rather for HSBC out in Asia at the time, he commissioned me to do this thing. Got right behind the report. And he, Peter Brooks, and I ended up going to Canary Wharf and presenting to the board. And they just didn't get it. And for me, that was the epiphany, right? Because, we had in that, and that was my first sort of super forecasting professional piece of work, but it was still pretty accurate. 2008, we forecasted that internet-based banking would transactionally at least, overtake the branch. And then by 2015, mobile would overtake both the branch and the internet. And the board of HSBC thought that was a ridiculous concept, when we presented that in 2005 and early 2006. So for me, that was the epiphany. That was the epiphany that banks were not ready. Even some of the best banks in the world, they had a blind spot when it came to digital because they thought their traditional model could just overcome. And their argument for that was, everyone told us branches were going to disappear when the internet banking came along, like egg and so forth. And so therefore it hasn't, so therefore it never will.
Yep.
But today, when we look at those numbers of the 4 billion customers of the top 20 retail fintechs versus 2.7 billion customers for top 20 retail banks, we can see the effect that digital has had. But then after I wrote the book, taking the lessons from that, and the reason I did that, Jason, was I realized that, that for the three of us, of course, we've always been on this digital transformation journey. But I realized that people like us didn't have a voice. They didn't have someone that they could stand by and say, well, don't believe what I'm saying about this to the CEO, read what this guy says. He's the expert on this. And that's the positioning that I took. And then when I launched the book, which was April 2010, I ended up launching at the Asian Banker Summit in Singapore, first of all. We had a staggered release. Then we launched in London and New York. And in New York, I visited with our good friends Josh and Shamir at Simple. And it wasn't long after that you and I met, Jason, but I visited with Josh and Shamir, and they told me about what was happening at Simple. They really loved Bank 2. That's why they wanted to meet. In fact, they came to my New York book launch. And they asked me whether I wanted to be involved in that. But I'd already had this idea to do a mobile only approach to that. So that's it was actually after I met them in New York, I sort of really was okay. This is the direction I have to go. These guys are onto something, but I think the mobile direction is going to be differentiated. So August the 8th of 2010, when I was in New York, sorry, not in New York, in Los Angeles, doing a book launch for Bank 2.0. That was when I ended up, after the book launch, registering the domain Move and Bank, so that became part of history. And then we met sometime after that, right, Jason?
About 2009. No, 2010.
Oh, 2009 then.
Yeah, I think
it was 2010. It was about the same time.
Yeah, it's about the same time. I think we predated Simple, and Bank Simple as it was noted those days.
Street absolutely did. Right. Yeah.
Yeah.
Sure.
And I'm curious. So, if we play this out, I would say the majority of institutions across the globe no longer will argue digital is not important, right? Like it is no longer heresy to say that. But JP, I'm curious from your perspective and the amount of work we do at Alloy Labs with, primarily community banks in the US, but banks of all sizes, and we still do some international. Have we actually gotten that figured out? Like, are we done with digital? I think that's the key question I hear. It's like, are we done with digital? Like, is that done?
No. The challenge is they are so tied up with their legacy and their history. There's a bank that that we worked with recently, talked to one of their leaders on the lending side about some different technologies that might help them provide more value to their customers. And the response was, well, we have a really high bar for that. We're going to need to see a 6-figure return. I'd rather spend 6 figures on hiring another relationship manager, another human. Yep. And so what still happens is that anything new has to clear a much higher bar than anything that we used to do. In fact, anything that we used to do doesn't really have to clear a bar at all. It's just baked in. So we start with a budget that's here's all the things that we've done for 150 years. Do we have room to do anything else? And that's really the limiting factor at this point.
I think that's one of the reasons you see these digital players, separating so much in terms of performance now from traditionals, like say Nubank and WeBank and even Chime in the US. Chime has more customers than US Bank now. So why is that? Is that they don't have to make sacrifices on the legacy side. They don't have that internal debate going on about which should go to legacy channels versus which should go into digital. It all goes in digital, and in terms of like we look at Nubank as an example. Nubank has the lowest operational cost rating of any bank in the world. WeBank similarly. And that's cost to income ratio. I mean, and so that is indicative of the fact that a digital pure play now is much more operationally efficient, and their low cost of acquisition is a part of the scaling laws we talk about. So that's why they're taking market share, right?
Well, let's talk about that for a second. Let's do a pivot for a second. Let's talk about Nubank and Bonk and others. Why do neobanks that have done exceedingly well outside of the US feel compelled to come here?
Well, it's a huge market. And right now we do have Chime, but because of the lack of fintech charter infrastructure, because the US is only the only G20 nation that doesn't have a fintech charter. And so because of that, there's still, I think, a perception that the market is wide open for a fintech to come in and take that sort of neo-banking moniker, despite the success SoFi and Chime and others have had. There's still there's still many, many customers that eventually will go to digital once that proposition comes. I think that's the logic, right?
I think it's the logic, but I'll be honest, I don't buy it. Maybe I'm biased by, if you go back in our own Wayback Machine, the episode with the president of America's for N26 is like, digital is no longer a problem in the US, not just because we have Chime and Mercury and Bluevine and, Current and these others, but even our biggest banks have figured out digital pretty well. And a number of community banks have done it well. JP, do you see an unmet need here that we need another challenger bank here?
No, and we are such a developed nation that we have a lot of habits around things that work well enough, right? We still have not very many, but still a significant number of people that write paper checks for things. That plastic artifact that you've been claiming the death of for the longest time, Brett, the credit card, right? It still works.
Are you proud of the fact that 80% of checks are written in the United States? I don't get that, dude.
It's something of pride, but it is awfully difficult to displace.
Right. Yeah, it's not about pride. It's about the reality that for many people, it doesn't feel broken. And so certainly as the older generations die off and the younger generations get more active in the financial life, that trend will continue to accelerate.
Yeah.
But these are, for many people in the US, these are marginal gains. And in fact, for a good chunk of people, we're not even sure we see the gain, right? Like, I don't understand. What I do right now works just fine.
But I mean, this is probably a very important question, and we have been skirting around this for many years. Is at what point does the US banking market become an anachronism because it's so far behind the rest of the world because of these legacy entrenched legacy things? I mean, we have, part of the reason China has been so successful with mobile payments, part of the reason that UPI in India and Pix in Brazil have had such an incredible take up is because they didn't have that legacy infrastructure that they had to displace. It was just cash.
Right.
And so, we can understand why that happens. But now you have Brazil, who, and China, which up until very recently, the US would have considered developing nations, have far more advanced, peer-to-peer capabilities than the United States. Brazil and China are 10 years ahead of the US on real-time payments. They have 100% adoption across the board. We're talking trillions of transactions annually, compared with what we have in the US on FedNow. It's fractional. So, and then the plastic thing, JP, all of the fastest growing activity on payments is moving to mobile, and agentic's only going to accelerate that. So at what point does it mean that the US has just missed the boat and is so far behind in this story? The US could no longer claim to be the most advanced banking system in the world with those legacy constraints.
Certainly,
did we ever claim that?
Yeah,
I don't know. Yeah.
Maybe on the back office and a number of things from trading, market structure, and other. But I think certainly, I think the bigger problem, Brett, is we've had a boat. Like, our boat was too sufficient for too long, but we're still paddling a canoe, and everyone else has discovered the speedboat, and we're still paddling.
Yeah. But we'll get there eventually. The paddle works, right? Yeah.
Well, you're the futurist, Brett. So I don't know. You asked the question when, at what point. I don't know. But eventually, I certainly don't argue with you on the trend line. What I worry about the most is the value of the U.S. dollar and the safety and integrity of the U.S. financial system, not the tools or the mechanisms of moving money. Those are, I think, the biggest risks to the U.S. losing its place.
That's an economic question. rather than and maybe monetary policy,
I
particularly
was going to say it's
given
a policy
what's happening at the moment. Yeah,
question.
it's not, but it is to some extent. I mean, there must be a point from a technology infrastructure perspective when everyone says, well, hang on, we don't want to put our dollars in the US because the system is so old and broken comparative to what's happening in the rest of the world. That's a very real risk that the lack of technology infrastructure may be an impediment to, the successful operation of the US dollar in the economy. I don't know.
Yeah, I think first and foremost is my money safe and secure? If that question is answered, then the next question is, can I deliver it to counterparties as quickly and cheaply and efficiently as possible? So far, we're still hanging on point one, and point two is where we're seeing the erosion.
Mm. But I mean, is point one a big differentiator? Like, when was, like, we do have bank failures, notably SVB, Silicon Valley and so forth. We've had bank failures here. But, I mean, not an extraordinary amount comparative to other markets, but China and, the European markets haven't had likewise either, big failures. So the security perspective is not such a big differentiator.
It's less differentiator and more just inertia, right? That it's been the default currency and the default system.
So let's talk about default
ahead,
and what incumbents need to be doing and the new entrants need to be doing, right? So if we're agreeing the world is in flux, and I think we have some differences of opinion about what happens in the US, but I think if we say at a global level, things are changing and relatively rapidly. And digital transformation is no longer a nice to have or something that is open for debate. Where does it fit? And, let's take different perspectives along that of where does digital fit against the institution and what is the mandate? And I think a big piece of this that we have to put in that are new as it relates to digital is AI and stablecoin.
Yeah. Well, let me jump in on that one because, we saw $43 trillion or $45 trillion of stable coin, activity in 2025. Now, granted, a lot of that is stable coins being used to purchase altcoins, so it's not all just transactional activity. But the growth in use of stable coins is very clear, and it's going to shift to bigger sort of smart contract stuff, and that's sort of happening quickly. We see JPMC, particularly on deposit tokens. We see a number of banks getting into that big time, but we are going to obviously see a lot more experimentation on the agentic AI side with smart contracts that are built on top of stable coins. And that will lessen a little bit the US dollar stuff. If the geopolitical situation continues to provide uncertainty in the way that it is currently, and that's a big question, then you will see, BRICS nations and others looking at, a basket of currencies to hedge the risk of, US dollar challenges. And then, of course, you have in, the next decade real questions about US debt and how that's going to affect the dollar on a long-term basis. So there are potential issues that could provide stable coins and these sort of digital currencies some mechanisms for really taking a chunk out of global US dollar trade, and China would love to see that, I'm sure, for example.
Yep.
So there are some potential elements there, right?
Oh, for sure. To me, and I'm not a hodl crypto bro, so I'm probably not the right person to think about this, but on the other hand, maybe I am, because what we're talking about is stable global systems. And to me, the thing most surprising is how long it took us to get to the stable coins. Right? We spent so many years of chasing highly fluctuating cryptocurrency prices. And it was shocking that we didn't circle to this early. We had to go through NFTs and a bunch of other silly things before we kind of realized, what would be helpful if this digital currency actually had a stable value so that it had more utility. So I think we're still shaking out a lot of the speculators and a lot. I mean, we're Las Vegas in the 1960s. The corporations haven't quite fully taken everything over yet. And we can argue about whether that made it a better or worse place. But
that was a core problem with Bitcoin as a design premise, in my view, and a lot of crypto bros will argue against this. But my argument is that because of the limited supply, the 21 million Bitcoins, that created a appetite for speculation. Right. I remember we had John Matonis on the show back in 2013, and he was the head of the Bitcoin Association at the time. And he's like, no, you just move it to the other side of the decimal place and people will get that. They didn't. They did it, right? So that speculation and the hope that your altcoin would become worth $1 million one day and you'd become a billionaire or something like that became a sort of a core element of crypto from a cultural perspective. Even HODL that you mentioned, JP, that goes down in history as, what are you hodling for? You're hodling for Bitcoin to hit $1 million, right? So you're not going to spend digital currency if you are speculating on it that it might be worth a lot more money in the future. And that's the core problem with cryptocurrencies versus stable coins is you're not going to use them to spend on stuff. So we needed stable coins. But what's happening now is that the DeFi world of stable coins is becoming traditional finance, right? And so it's like, well, we kicked the tires, we tried it out in the DeFi world, and we knocked the rough corners off, and now we're institutionalizing the stuff that works. So that's my perception.
I agree in general.
Yeah.
So,
but Jason, what do you think? Well, I mean, play it out. With the agentic AI stuff and the stablecoin tokenization that we're already seeing, where do you think that's going to have impact? I mean, are you guys starting to think about smart contract and stablecoin implementation at Allo Labs, for example?
I mean, we are definitely paying attention in looking. I personally am more excited about smart contracts than stable coins just broadly.
Right.
So we've been told, from a number of banks, cross-border is the use case they see, except for years they've been telling us, all my years involved with currency clouds, like, oh, we don't do much in cross-border. Like, that's a solved problem for many. And we're not seeing the relevance. Now, I think the danger is you can't just not pay attention to it. It's just the immediacy of what you can do about it. And I think broadly, this is where incumbents, not just community banks, struggle. Is if it is not an immediate threat or opportunity, they don't spend enough time on the exploration, monitoring, pondering, and experimentation until it's too late, right? And then they wonder why they're behind. And so that is something we're trying to solve as a group is what is the appropriate level in modulation versus some of the hysteria that has gotten people verbally very excited and paying attention to it. But in the background, they're not doing enough to lay some of the foundational things, right? Like I think about the beauty of stablecoin is it may pressure some who really have not invested enough in digital infrastructure to make some infrastructure investments. They've been doing the customer-facing digital investments, but not the infrastructure investments. And I hope stablecoin can pressure that.
Well, I mean, this is where agentic AI is going to become a key factor in sort of pushing this over the line because, I just don't believe, and there are some solutions to this right now, but in terms of deploying agentic payments and agentic, based smart contracts rapidly, stable coins are the easiest approach to this, because all of the smart contracting infrastructure that's been built to date has been built on stable coins. So you could replicate that using USD, US dollars, for example, but you're not going to have that ability to sort of section off smart contracts and protect it from issues when you're directly coming in and out of the core. So, I think stable coins are built for agentic operations in banking and finance. And I think the more we get into autonomous banking and finance, the more that we're going to see stable coins and digital money become much more reliable. One of the really interesting proposals that's been put forward by USDT recently and others is that instead of chargebacks that we have when fraud occurs, because of the scale and the speed that agentic capabilities are going to give us, we may need to have a rollback capability for digital currency. So there's already some very different thinking about how transactionally, autonomous finance might develop. And my view is that the more we get into this and the more problems we see with agentic, in the implementation, the less likely it is that agentic AI-based finance is going to look like traditional finance with AI, and it's going to look like something different.
Well, and I think that's one of the biggest challenges, Brett, is a lot of the agentic solutions we're seeing are applications of things we understand today, in not reimagining what that solution could look like from a completely different context. And I'd say the former aren't very interesting and won't get adoption. The struggle is, how do you get to the reimagination phase without experimenting?
Well, you have to experiment.
Yeah.
And, you have to prototype. And that's something that, again, this is why DeFi has led the world on stable coins and smart contracts rather than traditional finance. Is, we're not really comfortable with prototyping in the environment because of exactly what JP said before. It has to work, and it has to work every time flawlessly, right?
Yeah.
Mm-hmm.
But the whole crypto world is not free of problems. We've had big exchange breaches, we've had fraud. So, and this is an argument, I guess, where we have to start thinking about need to regulate this environment to bring in the protections that we have in the traditional industry. And this is why sort of DeFi and TradFi are sort of merging together. But it is going to be different. The future is not, it's not going to look the way it has in the past.
Well, speaking of the future, as we think about the content we'll be producing in 2026, the exploration of this, I think, is keen for all of us. JP, what else are you thinking about for 2026 that you're going to be working on around themes?
Well, I think you said one of the words, experimentation. We have to set aside some small amount of our time. I've been thinking lately about 5%. If that's 2 hours, it's a Friday afternoon. Cancel all those meetings that everyone said could have been an email, and spend a couple of hours every week trying something, talking to customers, building a prototype, figuring out what others are doing, and figure out what the future does look like. Because I'm still seeing too many blinders on. Well, we're a bank and we're regulatorily protected and we're always going to have banks. But I think it was in 1996, Bill Gates said, well, we'll always need banking. We don't necessarily need banks. And we look at the consolidation that's happened, the threat that's been happening to the margins and so on. Banks have to figure out. I believe there is absolutely a place for banks, including community banks, in the future. But to your earlier point, it's not just about slightly iterating on all the things we've always done. We have to reimagine what that future looks like.
Maybe I could reframe Bill Gates' quote for this era, is that We need banks less and less in the future. We just need more financial services technology infrastructure in the future. And I think that's the
Mm-hmm.
difference. And
Yeah.
that's why, to your point, Jason, is that, like when we were talking about this back in 2010, and if you had that blind spot and you're still got that blind spot today, that's a pretty good indication based on historical development of this, that if you're not tech first or digital first, at some point, it's just not going to work.
Yeah.
Well, money movement has become so much more critical. It used to be literally you wrote checks. That was it. Then we added things like wire transfer and ACH, and then credit cards and debit cards. That's just exploded now. The ability to move money from one place to another. And for decades, that wasn't important. It was important to have a safe balance sheet to store the money, but being able to move the money, and that's easily disrupted from outside the traditional industry, which we are continuing to see every day.
Well, I think we're going to have some interesting things ahead as we're producing content. That rewriting of the rules is the key theme for me, coming up. Rewriting what do we think about stable coins? How do we think about rails? As you said, JP, how do we think about charters? A little more US based than some of our episodes, but I think we're entering an interesting time with different pressures in a way that we haven't really seen before. Just like the level of intensity that we expected to, I would say, alleviate post-COVID, they're not alleviating. We're seeing those pressures build and coming from new directions in a way that I think is ultimately, hopefully, good for the ecosystem. Well,
and from me, the through line is human beings make decisions, and boards and senior leadership teams have to make decisions that prioritize the future, not just protect the past.
Yeah. Well, if you're listening and you have some ideas of the content or speakers you want to hear, drop us a line, LinkedIn, X. You won't find me on X anymore, but someone I'm sure does it. Threads, Instagram, you name it. But get us your thoughts on what are you interested in hearing more of, but we're interested in exploring the future together. Next time on Breaking Banks, we'll have another episode, but this time deeper in on one of these hot topics.